Good afternoon, everybody. Welcome to the LendIt Fintech Weekly News Roundup. My name is Peter Renton, Chairman and co-founder of LendIt Fintech, coming at you actually from our New York office today. I've been visiting New York this week, first time in a long time, but I'm joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter, from the Long Island office, so not too far away from you, but
yes, the Long Island home office. And then Dan Kwan, our good friend. How are you doing, Dan?
Doing great. Thank you, Peter, for inviting me back. I'd love to come back over and over again.
It's always a pleasure to have you. So just give an intro to you and your company, your new company.
Well, it's not new anymore. So yeah. I'm Dan Kwong, co-founder and a general partner of a new venture firm called the Nevco Ventures. We are investing in fintech, mostly fintech, but also looking to other sectors, adjacent.
Right. Okay, well, let's kick it off. Lots of news this week. We are going to start, though, with Venmo. Everyone knows Venmo and Amazon. So Amazon has never accepted Venmo. It's never accepted PayPal. Obviously, they're competitors. But this week, Amazon announced they are going to add a Venmo checkout option next year. It's going to be in the browser, on the app. PayPal is still not going to be an option, but Venmo is. Clearly, this is coming from Amazon's customers who are saying they really want to pay by Venmo. But it's PayPal's sort of. They're getting in the door now with Amazon, which I thought was a super interesting development. And Venmo has 80 million US consumers, and everyone I know has a Venmo account. But what do you guys think? Is this what does this portend? Anything?
You want to go first, Todd, or you want me to go first?
You go for it.
Sure. Yeah. Well, I think this announcement probably came in at the right moment when PayPal has already been dropped by eBay, which is not a surprise, right? This is something has been making for a number of years. Yep. So this will be a nice way for them to hopefully gain back some revenue. But I think it's really interesting to see that Amazon allows Venmo, but not PayPal. I guess, I don't know. I don't have any inside information, but I have to guess probably Venmo charges a lower fee,
right,
than PayPal. And the other thing is, Amazon probably also looks at it as a sort of a mobile first move, because you have to use your mobile app to pay for your Amazon purchases using Venmo. So I think there's definitely good news for PayPal. There's one thing that I'm just not sure about is that we talked about this right before the show. PayPal price, actually share price dropped like 10% right after the earnings announcement, and they blame a bunch of factors, and eBay being one of such factors. I don't know how much this they're going to make up for it. And for Venmo, this is definitely positive news, because PayPal has really been trying to make this monetize the Venmo service so far. They have got debit card, credit card, but I think the segment probably is still losing money.
To me, I think the more fascinating angle to the story is not necessarily the partnership, but just what's happening in the payment space. Now, for so long, it was dominated by Visa, MasterCard, and now you have all these different payment mechanisms that are, when you think about it, I wonder if the bigger thing for the Venmo thing is that, for those that sell through Amazon, are they getting, hit too hard with other fees from Visa, MasterCard? I mean, the fees coming down all across the board in payments, I think, is the more interesting thing, and how rails are basically going around Visa and MasterCard. Buy now, pay later, famously, not using Visa or MasterCard rails. So to me, I think the broader payment space is really, really fascinating right now. I think, it's a very interesting tie-up with the two companies, but I think the broader what's happening in payments and how the fees and the rails are being constructed is really the more interesting part to me right now. And I think it's the next 5 years, the whole payments ecosystem is going to be vastly different from what we see today.
Yep. And we haven't even mentioned crypto. And
Well, yeah.
that, I mean, Venmo, you obviously PayPal offers crypto trading. I think Venmo has some crypto. I'm not exactly sure what, can't remember exactly what Venmo offers when it comes to crypto, but PayPal's certainly bullish on crypto, and that, it doesn't take much for Venmo to say, right, you can just use your crypto to pay on Amazon now. That
Well, I'm not sure if anyone wants to pay with crypto these days.
yeah, I mean, I don't know. Crypto's been a good investment, that's for sure.
I think
For
I think they would rather pay for crypto to say they paid with crypto versus like it being a real option to to seem cool at this moment.
Yeah.
But yeah, I mean it's pretty interesting what's going on there. It's
And probably just want to we a couple of weeks ago we talked about the MasterCard offering buy now pay later. This is definitely not. They're using their existing rails and partnerships to make that option available to their partners, not so they don't have to go through the very extensive integration with merchants individually. They can just go through a massive rail. So this is also really further proof that the payment space is going through significant disruptions in the next couple of years.
Yep. Okay, we need to move on. Robinhood. They were in the news earlier this week, not in a good way. There's been a data breach. It happened on November 3, which I guess is 8 days ago. And they had, seems like, there's 5 million email addresses that were obtained. 2 million of those had full names as well. And so I don't know how, it's kind of weird. 310 people had more complete data stolen. No social security numbers, no bank data, but address, date of birth, that sort of thing from 310 people. Hopefully you have to be unlucky to be in that group.
Very weird reporting of them.
It was strange, but Robinhood came clean right away. Didn't seem like it affected them too much, but they looks like they've nipped it in the bud pretty quickly.
I mean, cybersecurity. This is the as fast as fintech is innovating, the dark web or criminals, whatever area you want to bucket them into, is innovating just as fast. And so the battle for data. It's funny. I think Peter. I think we recently did a webinar or a podcast talking about the data that the companies, whether it be lenders, payments, banks, whatever, have. The bad guys are having almost the equivalent of that set of data these days. And so it's kind of like a battle of data with good intentions and bad intentions. And, I don't think there's any easy answer. I mean, it's just companies are going to have to keep innovating and protecting themselves. We've seen this many times with banks.
It's an arms race, right? That's never going to end. And I don't know whether are we sort of in this sort of data breach fatigue now? Like, you hear like, hey, there's data breach. Okay, so what's the big deal, right? I open my phone and iPhone would just suggest that, hey, this app was breached. Your name, your address probably was stolen or in the batch. You should consider changing it. I don't know. And I think this story actually cracked me up a little bit. There's one part of the story where Robinhood said the hacker socially engineered a customer support employee by phone. How did that happen? So this is
well, it was through like that's what these guys do. I mean, they get you get on a phone with a customer service engineer and you go, hey, can I just send you this quick email, or you go just say, hey, or you start chatting with them and you've got a photo of a dog that they really like. Just go, why don't you open up the photo of a dog I have? And boom, you're in.
Yeah. And they probably should do more employee training in the first place.
Yes. No, they should. But
I do think your point about the fatigue is somewhat of a it's a bad thing, because
it is.
If we're not attuned to that this is a big deal, then it becomes less and less of a big deal. And then our eyes are only opened when it's 100 million accounts stolen instead of 7. I think either way, fintech, the industry generally, should be very cognizant of what happened here. other executives should be talking to Robinhood, kind of just off the record, and hey, how can we better understand this? I mean, this is something where the community should be coming together to protect themselves, because ultimately, if Robinhood can get hacked, the chances are some other wealth manager or digital bank can get hacked. So.
Okay, let's move on. I want to talk about an article from Penny Crossman this week. I think it was Monday, talking about, obviously, Penny Crossman, American banker, talking about stable coins and being, the president's working group from Treasury released a report, working group on financial markets, stablecoin report that came out last week. And Penny has a really good article here, just talking about whether or not, who should be. Is it fair that the FDIC goes and says they want to be only, they want to make sure that stablecoins are only issued by FDIC insured banks? Really interesting commentary from Caitlin Long from Avanti, she's applying for FDIC insurance in response to this report on stablecoins. But then you've got the states saying, "Hang on, I don't think that's fair," because NYDFS they're already regulating some of the top stablecoin issuers. You got Circle, Paxos, Gemini, all in New York. So then you've got other states doing different things. Wyoming, obviously, Nebraska, Illinois. There's different. So there's a bit of there's some
turf
tension.
War.
Yes,
there's some tension about who can get in the way the most. I mean.
It's about regulators.
I mean, regulators have their role, and Dan, I know you used to be, in the CFPB, but I just think it's like the change from the last 4 years, even to now. It's like we've gone away from, hey, there's a sensible middle path here. It's like we have to jump from one extreme to the other. And the saddest part about all this is you have so many companies out there that want to talk to regulators, that want to work with them and create the boundaries with them. And this current stance is not helping. I think it's hurting so many companies. And then, think of the cascading effect. It's going to hurt the next company that says, "Oh, I was thinking of this idea, but I'm not going to do it now because, they're going to eventually regulate me out of business." So, I think there needs to be some sense of, hey, we need to come together as federal, state regulators and say, hey, how do we encourage innovation in a safe way? Because right now, the turf war, the overregulation, taking all these stances, it's like I said, I think it was a month ago. Europe's going to slide right past us, and us and China are doing the same thing in different ways, but quashing an entire industry.
Well, not yet. We're not doing it yet.
Not yet. We're threatening on that path.
Yeah. So I have a bunch of really unanswered questions, right? So how big is this market, right? We're talking about what? I don't know, $200 billion, $300 billion.
Yeah, exactly.
So it's sizable. It's lots of money, but in the grand scheme of things, it is tiny. So do we really want to pull a bazooka to kill this little, fly? That's number one. Number two, what's the purpose of FDIC insurance, right? So you give your bank $1. The bank actually doesn't take the dollar and put it in a safe box. Actually, the bank actually, this fractional banking, they actually lend out the dollar. And that's why you want some kind of assurance from the government that if the bank goes under because of bad lending practices, your money is still safe. So with stablecoin, do we really need that, right? So it's a small market, still growing very fast, but still small. And not to mention, and you guys also mentioned that these guys are, the Circle and the Paxos, these guys are regulated by states. Are we basically saying the states are doing a bad job? So most of the horror stories we are talking about stablecoins are really about Tether, frankly, right? It's a Tether that no really transparency in how they actually, whether they have a reserve or how much the reserve they actually have created to back their tokens. So I just don't get it, frankly. And I'm not against FDIC insurance agencies, institutions to issue stablecoin. I think that's fine. But there's really, so far as I can tell, there's no nobody can convince me that states are really letting this train wreck to happen without really exercising their oversight to ensure these guys are not cheating their customers.
Yeah. No, it's, and then this one last thing before we move on. Interesting that the Cato Institute, Penny talked to them, and
Norbert is new, and I actually haven't met Norbert yet, but we are going to actually meet virtually, unfortunately, next week.
Right. Well, anyway, they're saying that that actually stablecoin issuers should be regulated as limited purpose investment companies overseen by the SEC. So there's another whole different type of regulation there. But anyway, we need to move on. I want to talk about Socure, the largest funding round this week, $450 million at a $4.5 billion valuation, $40 billion valuation. Normally that would be massive news. Of course, these days, that's just another funding round that we talk about. But I do, the thing about Socure is that I think they're really interesting. They got 12 of the top 15 banks. Now it's all about identity verification, anti-fraud type things, and they've been a supporter here at LendIt for a while, and they're doing really well. And they got not just 12 of the top 15 banks, they got a whole bunch of fintechs, and SoFi uses Socure, and they're a company that we don't talk about much, but they're another rocket ship.
Yeah, I mean the other big thing, especially with the crypto world and interspersing with the regular financial world, the digital identity is only going to become bigger and bigger, and verifying who people are through efficient technology is there's more need now than ever before, and companies like Socure do it in such a slick way that it's kind of makes the onboarding process pretty seamless. And I think that's
especially if think about this during this pandemic, how is it possible for you to even open a account like in person in a branch, right? That's just impossible, and or virtually impossible. That's why I think the number is still astonishing. 12 of the large 15 top banks are using their solution to without identity. To verify identity. And one of the things they said in their press release that really caught my eye, they said their goal is to verify 100% of good identities and completely eliminate identity fraud. Wow, that's a
big goal.
That's a big goal. Yeah, I'm not sure if you ever reach 100%. That's really huge. Remember a couple months ago, Chime got into some issues where some of the customers, actually legit customers, lost access to their account because they were deemed as fraud, but they actually are not.
Yeah.
I mean, just think how complicated the banks are. I mean, within one bank, you have like 57 different divisions and all those different customers needing to be verified. I mean, Socure is one of the best, that's for sure.
Yep. Anyway, let's move on. I want to talk about Coinbase. Coinbase, well, that's what we're going to do for the last peg segment of news. We're going to talk about earnings because there's been a lot of earnings. We could spend the whole half hour talking about earnings, but I want to switch into some of the major companies that released earnings this week. Coinbase was one of them. They, if you think back to the third quarter, 6 weeks ago or thereabouts, it was. The crypto was kind of going sideways. There wasn't a whole lot happening, and so their trading volume was down, and so their revenue was down a lot. But I think they're going to find their Q4 volume is going to be up because crypto is crazy right now. So, but they still, I look at these numbers: revenue of 1.3 billion, EBITDA of 618 million. They just know how to print money at Coinbase. It seems monthly users dropped a little, but they've. They're a behemoth in the fintech space.
Yep, and they are. Yeah, I mean, there's probably I can't think of one or two others that you'd rather go to trade crypto than Coinbase.
The
safest
kind of selections they provide, the speed, the UI experience, it's all awesome. So I think, do you think, Peter? I think there's just so much sort of, obviously when you're publicly traded, Wall Street is really on the quarterly horizon. They don't go beyond 3 or 6 months. That's sort of unfortunate. And the next quarter, as you mentioned, this crypto is going crazy. Bitcoin, Ether hit a record high recently, so the number is going to look very, very good in Q4. I think it's probably going to just take really some time. I don't know how long it's going to take. Maybe 2 years, maybe 5 years, maybe 10 years for the. I think when crypto is becoming mainstream, but when crypto becomes really like a mainstream, just like people are comfortable trading cryptos as they are doing with stocks, ETFs, and the bonds. I think at that time we will have pretty stable stable customer base and also more normal trading activities, which should be relatively independent of the ups and downs of the crypto prices. But that's going to take some time.
It will take some time. And then the other thing is they got an NFT platform that I think they announced it in the last month or so. But I was listening to a podcast with Brian Armstrong, the CEO, just a couple of days ago, and he basically said he thinks the NFT platform could end up being bigger revenue generation than crypto. And crypto just generated $1.31 billion in revenue in one quarter. So it's a big business. And
the NFT part is it's fascinating what that space can potentially be. I still think we're years away from it getting to where crypto is today.
Oh yeah, for sure.
It's and I think that's, to me, the more fascinating part. We just watched crypto basically do this, and now it's been pretty steady this year. It's had drops, but back a few years ago it was kind of wildly up, wildly down, and it has swings now, but not nearly as bad. But yeah, the NFT space and what they're doing in the NFT space is going to be very, very interesting.
Yeah. Considering how hard NFTs are to really, to buy for the most part, like OpenSea is still not very user friendly. They're making money hand over fist, and I think Coinbase has has a huge user base. So I think it's going to be big. But anyway, let's move on to Affirm. Affirm reported earnings. They revenue $269 million, pretty solid. Beating analyst expectations, guided up higher for 320, 330. This quarter, obviously, the holiday season. They're expecting to do a bit more. But the stock went really up for the most part on the news about Amazon, because basically what it was is Affirm. We already heard about this partnership, but basically they're going to be exclusive BNPL for Amazon this Christmas season and next Christmas season, and that was news to investors. So boom, they had a nice bump.
I think the more interesting thing, and Peter, I think we were talking about this the other day in the office, was what happens after BNPL has boomed this year. Christmas season's coming up. Will BNPL be such a part of Christmas season that is where it encounters issues? And on the backside of it, the regulators come in and look at the areas which obviously in some cases need to be looked at, more standardized reporting and stuff like that. Like, will it, by the time we get to next Christmas, will the rules kind of be written for BNPL? I don't know. I think it's fascinating to see, because we haven't really seen a huge story. Like I went into massive debt because of this. I didn't understand the product I was using.
Yeah, I mean, just the last week there was a congressional hearing on buy now, pay later. They call it buy now, pay more later. That's the title of the hearing. I'm sure there are a lot of concerns about. Listen, I mean, some people actually equate this to the mortgage crisis that we went through 10 years ago, right? But this is different, right? So, yes. In terms of scale, in terms of the impact on the economy on the whole, and also, if these BNPL companies are irresponsible, meaning they are really not doing, they're not really lending money to the right people are really cannot really pay back. At the end of the day, they are actually going to suffer the consequences. Investors are going to lose their money, so they're going to go under. So, and I think if you want to be smart, you got to do the check that you have to check, right? So, which is underwriting. And I think I just saw there's a I don't know if it's a press release or some kind of reporting when Mastercard talked about their BNPL play, so they were actually getting lots of traction with Fifth Third, Synchrony, and SoFi, and some other banks in Australia and elsewhere. They're actually talking about using their access through open banking to consumer checking accounts, so that they can actually do a decent ability to repay check. So I think I believe that's where the industry is going, and I haven't seen any sort of a big sort of number that said to me that, hey, there's an increasing amount of debt that people cannot pay back, and as a result, this is bad for consumers. I think there's still a lot of good things that the BNPL can bring.
Yeah, I agree. And the thing is, the debt is just not that high because, like, most of these ticket sizes are low. Afterpay, it's usually like $2,000 is their max, I believe. That you add up all the BNPLs, and you probably still get a lower loan amount than the average Lending Club or Prosper loan, I would guess. But anyway, moving on to SoFi, also reported this week. Revenue $272 million, up significantly, 35% year over year. I think that's interesting about SoFi. I mean, they continue to add new members. Lending is still so much a part of their business. Their revenue is 272. Their lending revenue, 210. So the vast majority, 80% of what they're doing is still lending related. Now, SoFi's, they've got their name on a football stadium. They are trying to do crypto trading and stock investing and debit cards and what have you, but lending is still where it's at for them.
It's funny,
the lending thing. Sorry, go ahead, Tom.
I was gonna say the only comment I want to make was they bought a bank, and their earnings look very much like a bank. Lending is what leads the way, and they have all these other products, but lending is the most profitable part of what they do.
Yeah.
So I think SoFi has done a fantastic job in really sort of, they started as a student loan refi business, right? But if you look at their lending volume, their student loan refi accounted for probably, the level of the lending, probably student loan refi was less than half of the pre-pandemic level.
Right.
So a lot of business is going through credit cards and the personal loans and mortgages. So that's really a good job they did. The other thing is just their ability to add new customers. It's still quite astonishing because SoFi is no longer a startup. It's a publicly traded, very, very mature business. But they're adding, I think, just in this quarter, on average, 4,200 new members every day.
Right.
Which is like 377,000. And the numbers was higher than last quarter. Last quarter, probably we're talking about up to 3,000 a day. So that growth is really astonishing, and the ability for SoFi to really cross sell their products. And I think the crypto trading definitely is. I'm personally, I'm a SoFi user, and I know how easy it is to use their app to trade cryptos or buy stocks, fractional shares. It's just so easy for people to do. So I'm not surprised at all they are able to cross-sell their products to their users.
Mm-hmm. Okay, so last but definitely not least, we have Upstart. They have been a rocket ship this year, and they had another, it was a solid quarter, $228 million of revenue, above expectations. They're solidly profitable. And they, their stock is up 670% this year, which I don't think anyone would have predicted that at the start of the year, because but people love them. They've had a bit of a correction in the last couple of weeks, but still doing well, and still that is a nice profit margin that they've already got, and that I think they continue to execute. And just one other thing, they're starting in small business lending, which I thought was super interesting. Totally surprised me that they sort of slipped into the earnings call.
One question I really have for both of you, and probably for the audience as well, how if you're an investor, how do you value these stocks? Do you value them as financial services stocks, or do you value them as a technology? It looks at the multiple that these guys are having today, Affirm or SoFi or Upstart, especially Upstart. It is not a traditional financial services.
Of course, you can't. There's no value. There's no multiple that gets you get you there.
Yeah, Upstart, I would say, is a technology company, and SoFi and some of the others that we were just talking about, I'd say more financial services.
But they're still growing. What they do is
Yeah.
the reason that they're still doing well is because they just keep growing, adding new customers, growing revenue much faster than any traditional financial institution does.
Yeah, monthly active users, all that.
Yeah. That's why I think people are still putting a lot of premium on these stocks.
Yeah, the party's going to end eventually, but we don't know where and when that will happen.
Get in early, get out at the right time.
Exactly. That's great advice, Dan. On that, we're going to finish it off.
Perfect ending.
Yes, thank you all very much for watching or listening. We will be back here same time next week. Before we go, though, just a quick reminder: we have our Latin America event happening in 4 weeks, less than 4 weeks now. Really super strong interest in this event, and if you even have a moderate interest in Latin America, you should. There it is, in person in Miami. It's going to be a blast. Thanks, guys. Have a good weekend.
Thanks. See you, Dan.
Thank you, guys. Take care.